Hi everyone, just a quick sound check and then we can get started. Boom, boom, boom. Okay, sound check 1, 2, 3. Do we have audio? Audio check. So, audio a bit low. Yeah, audio is a bit low. Let me just adjust it. Give me 1 second. And okay. Let me know if it's let me know if it's okay now. I had to tweak some of the audio settings because we were having issues. That's Monday, but audio should be coming out okay. Probably, hopefully, not too loud. Okay. Any issues with audio, just stop me and let me know because there's a little bit of a lag between me looking at the chat and, hearing it back. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature as the information or advice given does not take into account a particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry high levels of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative for future performance. Okay, good. So audio seems to be fine. Everything seems to be good. Happiest New Year to everyone here. This is our first session for this year, right? And welcome back to 2023. I think it's a good start this week. I don't really think last week was, market is really back at full capacity. But this week, yeah, we're looking at good price actions here. We're looking at a lot of sentiments moving in the market right now. So this is all great, and I think we are quite in a good position to sort ourselves out before the CPI from the US tomorrow. Okay. Let me go through the questions here. I think there were some questions, price stuck in the box, blah, blah, blah. Do you have a proper sideways trading market condition trading plan? A trade by trade breaking Ichimoku Cloud. So the last thing that the last webinar last year was me talking about the need of having two separate strategies, one for a trending market, the other one is for a sideways market condition. If you only have one, it's fine, but try to know what is the current market condition and avoid that market condition if you don't have a proper trading plan for it. All right, so audio was a bit lower, so hopefully this is adjusted okay now. All right. Are we having problem with video? You know what? I'm not that happy with the audio. Just give me 1 second here, guys. Just give me 1 second. Okay. Okay. All right, audio should be a lot better now. Hopefully it's all good. Okay. Right. So let's get started. I'm just going to touch base on gold first because I think a lot of people are going to be asking about gold. What's the story with gold? You know, what's really going on? And last year, when we did our session, there was a concern for a potential rising wedge. This one here, I was reading through comments that a lot of people were actually posting out. The break above that rising wedge is actually not a signal. It's actually not an indication to anything. It's not actually an indication for you to actually go long on a rising wedge because a rising wedge is only a reversal pattern. The breakout that happens there was basically something that invalidates this rising wedge. So technically that's the reason why I don't have that rising wedge anymore. So we don't actually trade that breakout. We don't actually trade a breakout if it breaks to the upside on a rising wedge because noisy now. All right, doesn't look like I can please everyone here, but let me get. Sorry. Ah. Okay, so audio is now a bit louder, but yeah, hopefully we can go through this. Hey, it's better to have a good audio, right? Right. So let's talk about gold first. So let me clear through that first. And so there's no more rising wedge, and we're not looking for a potential reversal on gold at this point in time. Right now, market is kind of being positioned for a potentially weaker CPI numbers. With that weaker CPI numbers, the sentiment in the market is that hey, if CPI goes lower, then FOMC is actually really close to their inflation target rate, so there's a possibility that target rate is not going to get adjusted in 2023, and that is basically what's giving gold a little bit of a boost right now. So in terms of gold, we are basically really kind of stuck at around 1880. So this is going to be your immediate resistance in the market. If you are trading gold right now and if you have a long position on gold, you need to watch out for 1880 because if there's no daily close above 1880, then we might be stuck a little bit with gold. I don't expect a sudden reversal, below 1800 at this point in time, but be cautious if you're trading in the short term. And right now, price is currently stuck at 1880. Okay, beyond 1880, then we have 1900, right? Okay. So that's with gold. So I'm just going to bring gold out first because I know there's going to be a lot of people asking about what gold is. Now, what about Euro USD? We are actually really positioning ourselves for the Euro USD at this point in time. This is actually one intraday opportunity if you are planning to trade the Euro USD today. Position traders would probably have to wait for a little bit longer. We are really waiting for that CPI numbers tomorrow. But intraday wise, there's actually a small range you can actually trade on the Euro USD. So the baseline on this one here is actually 1.0720, right? That's a support right now. In terms of resistance, we are basically looking at 1.0750. So if there's an hourly close above 1.0750, then we are going to be looking for a long position. Your stop loss is, it varies. You can have it at 1.0720, or you can have it at 1.07, right? In terms of target level, that's where we actually need to bring in the target for the daily time frame, because we would have 127.2. That's about 1.0776. That's going to be your first immediate target for the Euro USD. Risk reward ratio probably doesn't look good if you have your stop loss at 1.07, but if you do have it around here, this is going to be about 1-to-1 risk reward ratio, give or take. Okay, so that's that for the Euro USD. Do I prefer a break to the upside, or do I prefer a break to the downside? Either way, it's fine, because we're not really looking at more than a 1-to-1 risk reward ratio. In terms of range, this is currently constrained within a 30 pip range. So if it does break above 1.0750, then obviously you can go for that 1.08, or you can go for that 161.8% on the daily, which is very close to about 1.0850. So you have a couple of options here, but this one here is actually tradable intraday, because I don't think price is just going to get stuck between the current range all the way until tomorrow. I think we are going to be looking for a potential breakout. If it does break to the upside, again, we need an hourly close. We need a close, not just price, spiking through it. We definitely need a close above it. In terms of target level to the upside, you can go for 1.08, 1.0825, 1.0850 if you want to. That's completely okay on the Euro USD. The other, because this is a potential range breakout, therefore we need to look on the opposite side as well. If it does break, or if it does close below 1.0725, then you do have a potential target towards 1.07, right? Risk reward ratio is not going to be great, but if you want to go for a 1-to-1 risk reward ratio, that's going to take you to about the support right around here, right? So that would bring it down to about 1.0675 as a potential target. That's going to give you about 1-to-1 risk reward ratio. It's not pretty, but that's the best intraday outlook that I can give on the Euro USD. Now, the probability, obviously, I would prefer for a buy instead of a short, but let me bring you the daily time frame. We did a session on Monday, and the session on Monday we were a little bit afraid on the Euro USD because the difference between Tenkan and Kijun Sen is really, really far. Right now, Tenkan and Kijun Sen has pretty much crossed over. It's pretty much flat. We are pretty much at equilibrium. Now, if we take a look at it from the daily time frame, this one right now should have enough momentum to continue higher. We're just waiting for a little bit of a pause here. If you take a look at that pause there, what's really forming on the early time frame or on the hourly time frame is more of an ascending triangle. Again, just a quick reminder, because we took that fib from a 200 pip range, we don't really expect a strong continuation to the upside. Are we creating a new high? We have already posted a new high on the Euro USD, but just a reminder, it's likely going to be limited to 127.2 and 161.8%. Therefore, we would have a little bit of a technical cap at 1.0850. Now, if we take 1.0850, now this is the scenario that would happen if the US CPI does fall below consensus. But 1.0850 was basically previous resistance and support back in March and April 2022. That would be your technical cap on the Euro USD. So, position traders, I think some of you probably jumped in on a long on a break above 1.07. So technically, we do have that break above 1.07. If you are in that position, then and you are holding on a swing position or more of a position trade, then your stop loss would still need to be below 1.05. It's not pretty, it's still huge. We don't have any swing lows in the short term to actually kind of adjust our stop losses at this point in time. So if you are in that long position, then this would be your potential risk. If you are in that long position, then you would be aiming for 1.1 and you would be holding that position until that happens. Okay. All right, so that's the Euro USD. Intraday wise, I think we're looking at a potentially great opportunity. You would likely see an entry within the next hour, and it's possibly towards more of a technical correction to the downside on the Euro USD here. Again, if you do go short on this one, just be mindful of 1.07 first, and then you can go for that 1.0675. But if we go by FIPS, then this would be the FIP count, right? We would be looking at, yeah, just around 1.0675. Really nothing much other than that, right? Beyond that, you'll be looking at a 50% correction, which is around 1.0625. So if you are trading short, if this one here breaks short to the downside, then you can play around with your target. You can go for 1.0675, 1.0650, or you can go for that 50% at around 1.0625. Then your risk reward ratio would makes a little bit more sense. Okay. All right. Gold, yeah. Got gold. Video is good. Audio, the one before is okay. We can just crank it up from our end. Okay, video and audio is good here. Okay, almost 1 subs, right? And I'm talking about almost 1 subs. Hopefully we get to that 1 subs in this session. It'll be awesome, right? Anytime. All right. So that's the Euro USD. Now I do have a little bit of a different view on the Pound USD. Intraday wise, the Pound USD is a little bit unique. We basically still need to clear off 1.21 at this point in time. Wasn't looking for any potential breakout. If you were trading, the Euro session breakout, you would probably got an entry on the Pound USD. But right now, as it stands, with the Pound USD, even on the hourly time frame, this is the current fib that we have. All right. I would much prefer to see it across below 1.21 before we can see any movement to the downside. And if it does close below 1.21, then you do have a couple of targets. You got 1.2050 and 1.2. Not really looking at a return towards 1.9 at this point in time, but if you are trading intraday, you might expect a little bit of a correction to happen. But, if you're anticipating what's in for tomorrow for the US CPI numbers, the US CPI numbers is expected to come down. And if it posted below consensus tomorrow, that's going to be dollar negative. And that's where a lot of position traders are just going to jump in on the riskier assets. So whatever you see tonight, okay, whatever break to the downside that you see, it's still part of a technical correction. I think market is really more positioning themselves to, look for a potentially weaker CPI numbers. If it does happen, that's going to be dollar negative. Just keep that in mind. If CPI goes up, then it will be dollar positive because it will be a surprise to the market. Because if CPI drops down this month, last month's data, this month's release, if it does drop down, then it'll be the third time CPI actually shrank in 3 months, right? Okay, so with the Pound USD, this one here is a little bit unique. I wouldn't be taking any position intraday wise. If you are looking for a position on the Pound USD intraday just for today, okay, I'm only speaking about what's likely going to happen for today. Intraday wise, we might see this one break lower. We might see this one go lower if there's an hourly close below 1.21. So some of you might actually want to trade the pound USD, but just keep in mind, if you do take a short position below 1.21, your stop loss at the very least would be about 80 pips. In terms of target levels, you'll be looking at 1.2050, 1.2025. That's pretty much it. Is it going to give you a 1-to-1 risk reward ratio? Initially not, but once it gains momentum and price maintain a position below 1.21, you can then adjust your stop losses very, very quickly, you know, either to 1.2140 or 1.2150. Then your risk reward ratio would be better, a lot better. But initial movement, if it does break below 1.21, you need to give the market some space to breathe. Okay, so that's the pound USD. Just to compare, just to prepare yourself for tomorrow as well. With the pound USD on the daily time frame, I think I mentioned this on the outlook. We do have a little bit of resistance at 1.2150. Last 2 days ago on Monday, it was actually capped at 1.22. The overall tone for this one here is that we have bounced off the Ichimoku cloud right now. Whatever that you see in the market, it's just a short pause in the market, but ultimately where the pound USD could go would still be to the upside should the US CPI number tomorrow falls or below consensus. The numbers to watch out for, just jot this down if you want to, because regardless or not, if you understand fundamental or you want to trade CPI or not, this is going to matter a lot, right? So the previous CPI number was 7.1%. This is the headline CPI number. The expectation for tomorrow is actually going to be 6.5%. If it drops below 6.5%, this is going to send the US dollar spiraling down. That's going to boost the Euro USD, the Pound USD, as well as gold. So keep that in mind for that CPI number tomorrow. Okay? All right, request for a Euro Pound. All right, let's take a look at Euro Pound. Okay, so this one is done. Right, Euro Pound in terms of range, it's still going to be between 88 to 88.75. I don't see anything new on this one here. Whether the euro or the pound is going to get stronger, I actually, for today, the euro is stronger, right? Because if we take a look at the movement in the euro, it's stuck in a range bound market condition. The pound started pulling back a little bit faster. If we take a look at it on the daily time frame, keep in mind the euro pound has just transitioned out of the Ichimoku cloud today, right? It opens up outside of the Ichimoku cloud. So this is not really a breakout transition. This is more of a time push transition. So with that, if we take a look at it on the hourly time frame, this is going to be a little bit tough, right? This looks like it could actually be overbought. It's not confirmed yet, but because we are so close to resistance at 88.75, if you're thinking of going long on the euro pound right now, then you'll be looking at that as your potential exit in terms of risk reward. It doesn't make sense, because your stop losses are going to be so far. You're risking a lot more. You're risking 34 for 14, 15. So I don't like this at all. If you're planning to trade the euro pound, and my view is that I think there's a lot more opportunity for the pound USD to be stronger than the euro at this point in time in terms of technical positioning. So if we do see a drop back below 80 on the stochastics, then I think you could be looking for a little bit of a pullback on the euro pound. In terms of swing, it would be this one here. So any break below that 23.6%, that would likely trigger a little bit of a short position. In terms of stop losses, yeah, you can have it at 88.75 if you want to. In terms of how far it might correct itself, I'll probably be looking at around 78.6%. That's pretty much it. It's not huge, right? I mean, the range is really, really small. So I'm not into trading the euro pound with such a small range. But if you are trading euro pound, unfortunately, this is the kind of range that you need to work out with, and that's pretty much it. Okay. So if euro pound breaks above 88.75, is that a trigger for more upside? If we take a look at it from the daily time frame, then yes. If it does break above 88.75, then the next stop would be at 90. So, which is, again, it's not huge, right? It is huge for euro pound, but it's still going to be capped at 90. Okay. But yeah, if it does break above 88.75, then I would probably be looking for more of a long position. Just make sure your stop losses are actually going to be below this low here, right around there, around 88. If you want to place your stop loss, it'll be at around 80. No, it's actually at 87.50, 87.60 ish. But yeah. You're right. I mean, if it does break above 88.75, then yeah. The overall tone for this one here is that we have a transition above the Ichimoku cloud. The Senko A has already transitioned above Senko B. So yeah, I'm more inclined to go long on a euro pound if it does break that. But just because this one just transitioned above the Ichimoku cloud, we do expect a little bit of a pause here instead of this one continuing to run up to the upside. But you have your guidance on this one on the euro pound. Yeah, Danny Trainer, gold's actually the first thing that I brought it up because I think a lot of people are going to be asking about gold. So right now for gold, just be mindful. This is actually going to be great for tomorrow, okay? So take it with a little bit of a context with it. Don't just go blindly on this, okay? The current expectation on gold, or the current sentiment in gold, the reason that this is getting pushed up a little bit higher is that because the market was anticipating a weaker CPI numbers. We discussed this on Monday. We look at a few reasons. Why was the dollar losing strength on Friday last week? There were a couple of factors. The employment numbers shouldn't be the factor though, because a lot of people just look at the NFP numbers and kind of blame it that the dollar is losing strength because of the NFP, and it doesn't make sense, right? The NFP number was actually good. It was better than forecast. It was better than consensus. Sure, it was less than last month's number, but the unemployment rate was up from 3.6 to 3.5%, which is good. So one of the triggers on the fall of the US dollar was actually the non-services PMI, non-manufacturing PMI, or the services PMI. It dips down below 50 for the first time, I believe, in 20 years. But yeah. So that's one sign that the U.S. economy could be slowing down. That's definitely one way to look at it. But then, I look at the upcoming numbers. People are actually looking for potentially weaker inflation numbers to come in from the U.S. tomorrow. And that's basically what's driving the gold up. Now, with that in mind, if you see that CPI number came in lower than consensus, it will send gold up, but there are still limits to it, and so far it's okay. The limit that we have was 1880 and 1900. Those are going to be your two resistances. If you are trading intraday, 1880 is going to be your level to watch out for. If it does rally up, then you want to be a little bit more cautious when price gets to 1900. So if you have a long position on gold, when it touches 1900, be very careful at that particular level. Okay, it might continue to break through, but once it goes to 1900, you should be taking out some of your positions, or you should be adjusting your stop losses at least to break even when it touches 1900, if it touches 1900. All right. The only driver for this one here would be that if the US CPI falls, then the expectation for the FOMC to adjust their target rate for inflation this year, it's going to be less. All right, they might stick with their current target rate, which is 5.5%, and that's pretty much it. It all depends on that CPI number tomorrow. If that CPI number falls, then yes, FOMC is going to start moving interest rate by 25 basis points, and they don't have to do that every month. But if the CPI number tomorrow comes in higher than consensus or even higher than last month, then the FOMC would get into that hawkish mode again, and they will start doing a 50 basis point hike. So, scenario number one, if CPI number falls, that's going to be dollar negative. If the CPI number comes in higher than consensus, that could actually give the US dollar a little bit more strength, right? Even though it's lower, if it's higher than consensus, it's still going to give US dollar a little bit more strength, because a lot of people are going to be cautious on what the FOMC is going to do. And that impact on gold is this. If they don't continue hiking interest rate, they will continue hiking interest rate, but right now is how big are they going to be hiking interest rate? If the CPI number was higher than last month, then the FOMC is going to shift back or continue that 50 basis points hike. If the CPI starts falling down, then they will shift into that 25 basis points hike. 25 basis point hikes is going to boost gold. That's the current sentiment. If the CPI number is higher tomorrow, then it's actually going to destroy gold. So be mindful on where we are positioned for gold right now. So that's my thought on gold. We have resistances. We've got 1880, we've got 1900. Zooming onto the hourly time frame, take a look at where we are right now. You need to be a little bit more cautious on this one here. One of the thing that we need to be a little bit more cautious would be that the Ichimoku cloud is actually getting it very, very thin. It's not going to be immediate per se. You would probably have about 1 day, exactly 1 day. So if price remains flat today around 1880, then tomorrow CPI's number it's either going to boost it up to 1900 or crash it down. Okay, so right now if you're thinking, yeah, you know what, I think I could trade the gold intraday wise, then if you're thinking if you want to trade gold intraday wise, that's completely fine. Just do keep in mind this is still going to be constrained by support right around 1870. Okay, so if you're shorting gold, then you want to be looking for 1870 as your target level, which doesn't leave you a lot, because right now if you're planning to go short on this one here, which I don't like it because we are above the Ichimoku cloud, if you do want to go short on this one here, then you're looking at a potential support to come in at around 1870. The next one would be about, give or take, I would say 1860 to 1850, about there. Okay, so that's gold. I don't trade gold. I'll be honest, I don't trade gold, and I keep repeating myself. I'm just more of a position trader. I just don't find any interest in any gold rallies to the upside. I would prefer a short on this one, maybe, but at this point in time, this is going to be a bit tough because if we take a look at it on the daily time frame, we are really not positioned for a short just as of yet. We don't have stochastics below 80, so we cannot really say this is overbought. Last year it was forming a rising wedge, but then it was cancelled out, so I need to kind of write that off. But if you want to go with that support trend line, it actually still exists, and that support trend line can actually still be used. So if you want to, that would be a support trend line, but the thing is, it's so far away, I don't really have to bother with it because we got some of the key levels to watch out for. Alright, got that? Okay, That's the reason why I bring gold up first, because don't trade this randomly. This is highly affected by what's coming up tomorrow. All right, please check the Euro New Zealand on the early time frame. By the way, any requests for me to look at, just type it in. If you guys are new here, thanks for joining in. This session we use this session for a couple of things. If you got any requests that you want me to take a look at, do let me know. If you have any questions regarding trading, this is the time to ask about it. Not on the Friday's webinar if it's off topic from webinar session, the Friday session. All right. Euro New Zealand on the hourly time frame. What can we say? Euro New Zealand on the hourly time frame. Should we be using this fib? Yeah, we should still be using this fib. All right, this is the current fib that we have. There's a potential projection towards 127.2, but obviously we have 1.7. Okay. Right. So the Euro New Zealand, if you don't have a long position and you're thinking of going in for a long position on the Euro New Zealand, I would be a little bit more cautious on this one here. Very close to 100%, which is around 1.6950. In terms of intraday support, you would be looking at support around 1.69 actually. Right, so the criteria for this one here is pretty simple. We don't really want to see price move back below. It's not 1.61. It's actually a bit lower. About that 78.6%, 1.6885. Right, we basically don't want to see an hourly close below that level at this point in time. So ideally, if you are thinking of going long on the Euro New Zealand, this one might pull back down a little bit. Might. Okay? If you wait for that pullback, then you would actually get a much better risk-reward ratio, because ultimately you are going to be targeting 1.7, which is going to be the key level to watch out for. If you're thinking of going in long immediately right now at this point in time, then your stop loss is going to be the same. Your target level is going to be the same. Your risk-reward ratio wouldn't be 1-to-1. That's about. It changes a lot. It's like 0.84 to 1.65. It nearly changes a lot, right? 80 pips, 109 pips, about 29 pips of difference right now. If you want to wait for that pullback to happen. The closer you buy, if the closer it is to the Ichimoku cloud, the better it is. Don't think on the Euro New Zealand, at least on the early time frame, I think we're still positioned to the upside for now. Daily wise, it's inside the Ichimoku cloud, so it might get a little bit choppy. So yeah, my view on Euro New Zealand, I wouldn't be thinking about going short at this point in time. We just exceeded 78.6%, so technically we are going to be looking at a potential move towards that 127.2%, very close to 1.7. So I will take 1.7. Yeah, because that's what's capping the market in December. All right, so that's Euro New Zealand. What about New Zealand Swiss and Pound CAD? So you guys are really into exotics, aren't you? All right, on the daily. All right, this one here is a little bit better on the daily. Okay, New Zealand Swiss. Here we go. This one hasn't gone in for a buy on New Zealand Swiss. This one is still on that trajectory. I think we did take a look at New Zealand Swiss when? On the 30th of December, 29th of December. So yeah, I think this was seen from the last session. I think you were the one that asked this, Chuck. So no changes from what we saw from last time. We are still within the Ichimoku cloud. Just a reminder, the support trend line still holds. I would still wait for a break at least above 1.59 if you are thinking of 0.59 if you're thinking for a potential long on the New Zealand Swiss. So Daily hasn't changed much. From what we saw 2 weeks ago, it hasn't changed much. Is it in our favor at this point in time? Yeah, I think the momentum is already in our favor. 2 weeks ago, I think we were looking for that shift coming out of the oversold condition for the New Zealand Swiss. So I would still wait for a break above 59 if you're thinking of going long on the New Zealand Swiss. Other than that, I wouldn't be touching New Zealand Swiss on the daily because this is stuck in the inside the Ichimoku cloud. Support trend line still holds. So this projection still holds from what we saw 2 weeks ago. Alright, so that's New Zealand Swiss. And I'm pretty sure it was you, Chuck, that asked me this 2 weeks ago. Okay. Right, next it's Pound Canadian. Alright, let's clear this up. We don't need that. We don't need this. Pound Canadian. Alright, let me go through. What was that back there? This one here is irrelevant. 1.69 is still key. Pound Canadian, I would probably be okay if you are thinking of going long on Pound Canadian at this point in time, because we do have a hidden bullish divergence on the Pound Canadian. Just let me check how deep this correction is. 38.2%. Yep. So it's a normal market condition. It's a normal retracement in the market. This would be the current trajectory on this one here. If you're thinking of going long Pound Canadian, I think you can go long Pound Canadian right now. Just make sure your stop loss is not lower than 1.61. Yeah, this one here, I'm okay if you're thinking of going long on Pound Canadian. A couple of target levels if you want to. You don't need to go for that 1.69 because that's kind of the limit. You can go for 1.66 first, and then as the market goes closer to 1.66, then you can adjust your target levels. Okay, but right now I think this is great. Risk reward ratio is about 1.9, so it's about 1 to 2 risk reward ratio. Yeah, this one here is positioned for a long on a daily time frame. Just make sure that you are looking at this from a daily time frame. So if you're trading on the hourly time frame, 50 minutes, and then you look at the Pound Canadian and just jump in blindly, that's not the way to do it, because your stop loss, your minimum stop loss is going to be 180 pips. But yeah, this one here is positioned well for a long. Just make sure your stop loss, and you have a stop loss at 1.61. So this is one of the few reasons when we look at the euro pound just now, I actually do see potentially stronger pound in the coming days compared to the euro. Euro is a little bit flat, right? So, you know, if the CPI fall, people jumps back onto a riskier asset, the pound is actually going to be a much better choice because of the volatility, and it is a little bit more riskier than the euro. All right. Right, next one is I'll leave the Dow Jones for later. Let's go through the yen crosses first, and let's talk about the dollar yen, because any reference for euro yen needs to go through the dollar yen check first. Okay, so dollar yen for this one here, I do expect a range bound market condition between 130 to 133.50, and that would still be the case. The overall tone or the underlying trend for the dollar yen remains to the downside, but I just don't see the momentum pushing the dollar yen down at this point in time. So with that, everything is tied into the dollar yen. This one here is, we're expecting this to be a little bit more of a range bound market condition. The euro yen, this one here, this was triggered when? Believe it was from Monday's session that we look at this fib. This is the current projection for the euro Japanese yen. There is a potential for this one to climb up higher and potentially test where the Ichimoku cloud is. In terms of momentum, we still have enough room, enough movement, enough momentum to push this back to the Ichimoku cloud. It doesn't change this to an uptrend. We are basically trading the correction in the market right now. The only concern that we have right now would be at closer to around 143. That's pretty much it. If you do have this position from Monday, pretty sure this is from a Monday session, right? Just be mindful of 143. That's going to be your 100%. That was the previous resistance level as well on the euro yen. Okay, if price touches 143, you scale out of your positions. Right now for the euro yen position, we weren't able to adjust our stop losses, but right now for anyone that has a long position on the euro yen from Monday session, you can move your stop loss now to about 141. Okay, and I would just let it run, simple as that, because this was observed from a daily time frame. Your stop loss moving your stop loss to 141, that reduces your risk to just 27 pips. So you know what, move your stop loss right now, let this one run. You can get out 143 and it still be a good return for you at this point in time. Other than that, you can go for that 144 if you want to, or 144.50. I would be happy at 144. I would be happy at 143. So that's euro yen. Start moving your stop losses. I believe this is from a Monday session. Right? So euro yen pretty much on track. Thinking, should we go long euro yen intraday wise? Yeah, it was from Monday session. So halfway there. So you guys want to scale out? I don't know. 142.50, that was the target on Monday. Ultimately we got 143.50. So you might think about scaling out of this position on the euro Japanese yen now, because I'm seeing a little bit of a regular class A divergence on the hourly time frame, and it is forming a rising wedge as well. So you guys want to get out from the euro yen? If not, then move your stop losses to break even. Think I'm going long on this one here. Your stop loss would be at 141. Okay, so this one adjusted to risk-free trade on the euro Japanese yen. This one we are done. If you guys are thinking, hey, you know, I missed out on that Monday's trade and I want to go in long right now, sure, your stop loss would be at 141. In terms of your target level, it would still be 143.50. Okay, about 144 risk, potential 100 pip gain on the euro yen. Euro yen did good. I think pound yen, we were looking at pound yen as well. Should be doing good. All right, we'll take a look at Dow Jones and Nasdaq at the end of the session. I'll leave that for later. So hang around. For swing trades, technical analysis on the major seems to depend on tomorrow's news. Should there be any rush in taking trades today, or wait until tomorrow? This is the way I look at tomorrow's event, right? If the market gives you the opportunity to jump in on the assumption that tomorrow's CPI is going to be bad, but if we get, let's say, a much better price with a smaller risk than if we had done it after the news, I would say go for it, right? But it really depends. Would I go for it? I've gone for it. See, I've gone for it. On this week, the thing that I was waiting for this week was basically the pound USD and the euro USD. So on both of them, I've gone for it. This was before news. As long as you have your stop losses, I think it's fine. And the reason why I jump in earlier, because my consideration is this: if the sentiment for a much lower CPI is there, and the market is really leaning into that. And also last week's Euro CPI number was coming in lower. The German CPI was lower. The France CPI was lower. The core CPI was up. Don't get me wrong, but the headline inflation was lower. So there was that possibility. The US could actually follow suit. We're looking at what's going on in the euro as a potential leading indication of what's likely going to happen. I've got a couple of other reasons, and I think we are going to discuss this on the 17th. If you don't know, on the 17th, we're going to do a 2023 outlook and a review of 2022. There's something I want to talk about, which is the inverted yield curve on the bonds. That's going to get discussed on the 17th, but I do have my reasons on this. But if you're asking, Should you wait or should you jump in? The way I see it is if it doesn't matter when. I care more about the risks involved. If I can minimize the risk by jumping in early with a smaller stop loss, then I would go for it. Okay, if we see weekly from 1616, gold hasn't made any correction yet. In my opinion, if gold wants to go higher, it has to be a correction. I haven't seen a swing high on a weekly yet. Please correct me if I am wrong. Okay. So yeah, look, I'm giving the time today to discuss gold. I normally do not like discussing gold. On the weekly, 1616, gold hasn't made any correction, correct? Yes. I haven't seen any swing high on the weekly. You have seen a swing high on the weekly because this price has actually exceeded that level, so it technically has created a new high. In terms of a swing high, as in we don't have a predetermined turnaround in the market, that's correct. We haven't seen a significant turnaround in the market, but we have posted a higher high. Daily. Which Chuck? Which pair on daily for divergence? Yep. $260 plus with a correction. Yeah, we haven't seen a significant correction. So, but you know, on the whole picture, right? If we take a look at gold, right? We are within that correction because, you know, by all accounts, if you take that high last year and the low last year, we're still basically, you know, still being capped by close to 61.8%, which is at 1,900, 1896 to be precise. Okay, so we are actually still within a normal correction in gold, so don't worry about it. Dollar yen in a downtrend. Dollar yen on the daily, yes, it's technically still in a downtrend. On the hourly time frame, it's actually within the Ichimoku cloud. This one here was from Monday, so I'll actually lift this one here from Monday. If anyone jump in on that short position, then your stop loss will still be at 133.50. Would I go for a short at this point in time? Probably not until I actually see a stronger rejection at 133. Right around the 50%. If it continues to fail at 133, then yeah, I would consider it. But at this point in time, I think this is on track towards 133. This one here, it's from Monday's session, I believe. So anyone jump in on Monday session on this one here, your stop loss cannot be adjusted at this point in time, and it's still going to be as it is. Euro USD, impulsive wave on what time frame? We can't talk about impulsive or corrective waves without any specific time frame. I'm on sale from 80 to 84. Aditya, which one? On what? What are you shorting? So yeah, Euro USD for me is pretty simple. This is the first thing that we talk about. You might actually have an opportunity today We are within a 31 pip range at this point in time. It would either break to the upside or it would break to the downside. I much prefer the upside scenario for the Euro USD. Overall positioning on this one here, this one is still above the Ichimoku cloud. You sold gold from 82. Gold is at 1,882. I mean, you short gold from 1882. Can I stay or can I get out? How do you want it to be? Do you want to hold it for a long period of time, or do you want to hold it for the day? Changes things a lot. If you're shorting it for the day, then I think it should be okay. The next available support would be around 1869. Just be mindful on this one here. I'm okay with a short gold position. If you're shorting it intraday wise, just make sure you have your stop loss. That's fine. If you short it at 1882, I think that's fine as it is. Just make sure your stop loss would. I would go for short at 1882, and stop loss shouldn't be that far ahead. Just make sure your stop losses are pretty tight. You know, around 1886. That's pretty much it. In terms of target level, you can go for that 1870 if you want to. Book half already? Yeah, awesome. Okay, can you wait for the CPI? The CPI is going to be tomorrow. It's not going to be today. CPI is tomorrow, right? It's not today. Pretty sure CPI is tomorrow. Today was the Australian CPI number. CPI is going to be, US CPI is actually going to be tomorrow. So, do you want to hold it until tomorrow? I'm not too sure, man. But if you already book half, then the other one should be moved to break even. I think that would be the best way to look at it. Okay, so you're doing it. Thumbs up. Okay. Right, if you're shorting it, right? Again with gold, if the CPI comes out bad for the US, or it's lower than what the market is forecasting, then it's actually going to boost gold. So you need to be careful there. If the CPI comes in higher than consensus, or even closer to 7%, then yeah, it would actually bring gold down. No worries. Hey, happy to help. Right? So, again, welcome to 2023. Be prepared for what's in store tomorrow. Telegram channel, I'll update you guys tomorrow. What is the positioning before the CPI numbers tomorrow. And I'll probably do a live update on the CPI tomorrow on Telegram. But everyone else for today, I like my Euro USD a lot. This one here, this could be this one makes reasonable sense, because if we take a look at a 1-to-1 risk reward ratio, we're looking at around 30 pips of potential risk. So this is actually small. This is okay. This for today, you know, might think of it like a small bite, a little bit of a snack before the big event tomorrow. Other than that, position traders are likely going to be positioning for themselves for tomorrow. Before we go on, I nearly forgot, we need to take a look at Dow Jones as well, and the US 30, right? So take a look at the US 30. This is what it is on the daily time frame. If you take a look at the US 30 and it's compared to the pound USD, it's actually very, very similar. We come back, touch the Ichimoku cloud, bouncing off the Ichimoku cloud. Very, very tight retracement levels right now. If this one's going to break higher, is it going to be limited? Let's see. I'm looking at 35. All right, and then that would be the level to watch out for. In terms of fibs, this is going to be your fib to lead you up for tomorrow. So yeah, 34,000, break 34,000, nothing next up will be 35,000 and then 35,500. That will be the progression for the US 30. The overall tone for this one here, the sentiment has kind of shifted a little bit. As long as we stay within 35,000, we are actually still very, very much range boundy. I wouldn't call it an inverted head and shoulder, but think about 35,000 as that potential neckline. We need to break 35,000 for any significant trend to go to the upside. So if the CPI is as the market expected, which is lower, a lower reading, that's going to push this beyond that 35,000 tomorrow. Okay, so keep that in mind for the US 30. Nasdaq, this one's a little bit tough for Nasdaq. Not really putting too much hope on Nasdaq at this point in time. This is the current fib on Nasdaq. We have corrected 38.2%. Limitation towards 61.8%. That's basically where the Ichimoku cloud is located as well. So it might be a little bit harder for the Nasdaq to rally. It's actually going to be easier for the US 30 to actually rally. The Nasdaq, this one here, it's a little bit tough. There's a little bit more resistance on the Nasdaq. Taking a look at it on the early time frame, yeah, it looks it's still gonna look very, very choppy. I think this is going to form a potential symmetrical triangle. I think this one is capped at 78.6%, at least on the early time frame. But just to double check, yep, exactly at 78.6%. So the next move for this one here would be, you know, maybe another 61.8% and or 78.6%, and then it'll actually form a symmetrical triangle, you know, pivoting around 11,150. Rain, waterfall. In my opinion, if the CPI news comes good for the dollar, how far will gold price go down? I got a long position on 1841. If CPI news comes in good, right? Okay, so before we go, let me go through that CPI number again for tomorrow. Get ready. Jot this down. I don't care if you want to know about that CPI or you understand that CPI trade, but just jot this CPI numbers down. The last month's number was 7.1%. The consensus for tomorrow is a drop to 6.5%. If we have a reading below 6.5%, let's say 6.4%, that's going to destroy the US dollar. The riskier assets are going to jump up. Gold's going to jump up. Pound is going to jump up. Aussie is going to jump up. The euro is also going to jump up, right? If the inflation number comes in as expected at 6.5%, then you are also going to see the euro, the pound, gold goes up, but not significantly high, right? It won't be like a crazy high move. It will move up, but it's not going to be as huge as if, you know, if it's below the consensus. Now, there are about 20% risks here involved. That the CPI or the inflation rate could actually come close to around 7%. So could be at 6.8 to 7%. If the number comes in still at that range, it will actually be positive for the dollar. Okay? Because market is going to be concerned that the CPI didn't fall significantly. Because the CPI doesn't fall significantly, the market will then shift to the thinking that the FOMC will need to continue that 50 basis point hike. They might have to adjust their terminal rate or the inflation target rate. The interest rate target, right, from 5.5% maybe to something even higher. Okay, that would be the concern. If the inflation number jumps up, if it was higher than last month's 7.1%, for example, it comes in at 7.2% or 7.3%, that is going to make the US dollar so strong, you are going to see a very, very quick drop on the euro, the pound, and the gold as well. So back to the question: should you be positioning yourself before that CPI numbers tomorrow? If you know what you're doing, then yeah, you can position yourself. As long as you know your risk, you can position yourself before the event. This is going to be okay if you're a swing trader. If you are a position trader, this is what you should be doing. If you are an intraday trader, then obviously why bother? Because it's for tomorrow. You think about it before it happens tomorrow, maybe closer to the CPI release. Okay? Makes sense, yeah? So those are my concerns. You guys just jump in and you wanna, you want to shortcut into what's going on for tomorrow, then jump onto the last minute here. All right. Too bad we didn't get to that 1 million during this session. I was really hoping that we would actually see that 1 million number in this session, but right now it still stands at 999,000. So if you haven't liked or subscribed, click like and subscribe and make this session that 1 million subscriber session. Alright. I don't want to get in trouble. Okay. I'll do the Aussie Japanese yen just because I really want to see you guys click on subscribe, because I really want to see that 1 million subscribers in this session. Come on. If you guys are watching this, you guys haven't subscribed, push it, because I really want to see that 1 million during this session. Alright. Well, I'll do that. While we're waiting for that, I'll take a look at the Aussie Japanese yen, and then yeah, Aussie Japanese yen is still okay. I think we're still looking at 91-92 range on the Aussie Japanese yen. Correction, 61.8% done. This is completely done. I think this one also about 78.6%. Yep. So we got 61.8%, 78.6%. The likely scenario for this one here is that we could be looking at this potential on the Aussie Japanese yen. So I'm not really expecting much out of the Aussie Japanese yen. Let me just check on the daily time frame, because we're still looking at that 91-92 range. Yeah. So on the daily for the Aussie Japanese yen, we're back at 91.92. So this is going to be a slow grind to the upside. In terms of resistance, we know there's going to be a resistance at 92, right? So not really that far. It's just right around there. Okay, so if you're thinking of going long on the Aussie Japanese yen, I wouldn't do that. And if you do want to go long for the Aussie Japanese yen, risk reward ratio is going to be 1-to-1. If you go short, risk reward ratio is also going to be 1-to-1. So I would wait for the Aussie yen. Either it closes above that 92, then I'll trade the Aussie yen again, or it move back below 91. Ideally, on the hourly time frame, if we do see that close below 91, I would much prefer to go short Aussie Japanese yen, because I have a lot more target to play around with. I can go 90, I can go for 89, but yeah, there's a lot of options. Yeah, break even on 78 for safer side. Yeah, that's fine. You can leave a little bit more room, but you already booked half of it, so I think that's great. Will the Euro USD test 1.0720 before continuing to move up? That's the breakout range actually. So this is if you missed out, this is actually the first one that we discussed. So it could be a little bit of a dessert, a snack. I don't know, before the main meal. We don't call that the dessert. So yeah. So yeah, maybe a palate cleanser or something. But anyway, this is the current range. If it does break, or as in there's an hourly close below 1.0720, then we do expect a little bit more of a pullback to the downside before any further continuation to the upside. All right. Okay. Good. So again, Happy New Year to you guys. Welcome to 2023. Thanks for joining in. Schedule wise, I think we have a schedule for this Friday. I just haven't had the updated schedule for Friday, but next week On Tuesday, we are doing a session for 2023 Outlook, as well as a review of 2022. There's a lot to discuss. There's a lot of things that I really want to discuss. So if you can find that link, share that link to your friends. For those that want to have an outlook for 2023, and also a review of what has happened in 2022 and what's the impact going to be for 2023, do join in. It's going to be the same time as this webinar on Tuesday, the 17th of January next week. All right, start a snack. Appetizer, right? And that's the word, appetizer. All right, guys, thanks for joining in. I think that's going to be the time that we have for tonight. Good luck for your trades. Remember the CPI number tomorrow, so good luck with that. Other than that, I'll see you on Friday.